welcome to commercial real estate, lending for commercial real estate. There's a lot of reasons why this is interesting. One is you can definitely invest in single family, 1 to 4 unit residential properties as a real estate investor. I know I do, lots of people do, but from a strict investment standpoint, if you want to invest in real estate and you're going to kind of scale up, at some point you're going to need to get familiar with commercial real estate lending, because anything over 5 units residential and then anything commercial, traditionally commercial, is treated completely differently with lending. So Nelson is an amazing lending partner and is super familiar with all things business and commercial. And I'm super stoked that we're going to have this specifically lending for commercial real estate workshop. And so, yeah, Nelson and I met through a networking group and are just love working together. I love sending folks his way because I know he's going to handle it well and is very familiar with so many different aspects of lending, from business lending to real estate lending. So anyway, Nelson, I would love for you to introduce yourself and say how you got into this, and then take it away and let's talk about commercial real estate.
Thank you, Sammy. Hello, everyone who's joining us. My name is Nelson Arevalo. I am part of Mop Financial. A little bit on myself. I have over 10 years in the financial industry. I started in banking. I started in business lending, scaled to commercial lending, and then transitioned over to a brokerage. We are a boutique type brokerage, meaning we don't have your typical brokerage where we have 20 loan officers, et cetera. We do residential, but we specialize in investment properties and commercial properties specifically. Most of our transactions are those of investors and businesses, just because we have that background in the banking world where we started in that. So I guess we could just start it, and let me fix my right here. All right, cool. So commercial real estate. A lot of individuals think that commercial real estate or commercial lending is complicated, but for me, I think it's just easier than residential lending. I think I'm not saying that just because I've been doing this for a long time, but I think it is easier, and it's once you understand it, it makes sense. So what we'll be going over in this presentation, we'll be going over exactly what is it that the bank are going to look at when lending towards a commercial real estate. This is meant for investors, but also meant for business owners that are looking to purchase property for their own business as well. So what is commercial real estate? Commercial real estate varies on the type of property. It can go from office space, industrial warehouse, apartment buildings, or retail space. Now, it's also important to note that there could be a house or something that looks residential. There's a house, but it might be zoned in a commercial space, so it would consider commercial. Also, you got multi-use properties where you have, for example, the retail space in the bottom and you have 3 apartments in the top. Even though it's under 4 apartments, it's still considered commercial. And okay, got that. Sorry, the admit. You're handling that right, Sammy, the admit part? Okay, cool. It's throwing me off here. So yeah, so that's basically what it is. The zoning also comes in effect, but traditionally office spaces, see what you see on your screen, it's what's considered commercial real estate. Also note apartment buildings, anything over 5 or more units is considered commercial. So what do lenders look at when looking at a transaction? So something called, all lenders look at the 5 C's of credit, and this is what they use to determine the credit worthiness of the borrower. The first one is character, capacity, capital, collateral, and conditions. So what does character mean? Basically, character just means the credit history of that client, right? Are you responsible with your bills, etc.? The second one, capacity, is the capacity of the business or the investor to repay that loan. And then capital, it comes with your assets. How much money do you have for down payment? What do your assets look like? Do you have already hold real estate? Collateral. This one, a lot of people, in my experience, overlook it, but collateral to me is probably one of the important ones, just because even though character, capacity, capital, and conditions are good, the type of property could determine if the bank wants to lend or not. The condition of the property, the location of the property, etc. For instance, an example, if you're trying to buy a property that's close by a gas station, those are high risk. The bank sees that as a high risk. For the most part, there's more to it. We have to get environmentals on it. So for most banks, or conservative banks, will stay away from those properties that are local for gas stations for that reason. So even though the business is strong and they could afford the payment, the type of property will, make the decision on if they want to lend it out. And then the other thing is the conditions. The conditions of the market. For instance, if we're in a recession, et cetera, these lenders are not going to want to lend on the commercial property depending on the conditions. Your business type has a lot to say as well. The investor, if you're an investor, they want to see you have skin in the game. So that's what banks pretty much look at. And these are the 5 C's, all looking at in this order. Some might look at it differently. Some might be collateral first and then the rest. But for the most part, character comes first and they go down the list. So in the financing sections, so unlike the residential side of lending, commercial is pretty straightforward when it comes to the type of loan or type of financing available. It's either standard financing, SBA financing for small businesses, and then in this recent year, something came out called the SCR, which will do 5 to 8 units for apartment units only. But these are specifically only for residential. So, and I'll touch a little bit about this after I finish going over the type of financing. So startup financing, your typically loan to value is between 70 and 75%, meaning that you have to come in with 25 to 30% down payment. DCR coverage, basically like DTI, your debt service coverage, they want to see that it's over 1.25 or more. So basically what that means is, just like your DTI debt to income, they look at it as an annual net income divided by annual expenses instead of monthly DTI. The terms are pretty different from residential, right? The typical terms are 3, 5, 7, and 10 years. And there are motorized at 20 to 25 years. So what that means is that you say if you get a 5-year term, you're gonna get a fixed rate for those 5 years. At the end of the year, you're gonna do a balloon payment. But if you don't have the funds for that balloon payment, you just refinance into the next 5 years. And then we have the SBA financing for small businesses. This is specifically made for small business owners. They're a little bit more lenient on the down payment and the loan to value because it's backed by the SBA, the Small Business Administration. The loans are capped in this section up to 5 million. The net worth of the owners have to be less than 15 million. And your average net income has to be less than 5 million for the 2 years preceding the application. So how the SBA works is when you apply for an SBA loan, look into your commercial property, it goes to 2 underwriting stages. The bank that you're doing it with, and then it goes to the SBA. So in other words, if the SBA approves it, the bank might not approve it. So it goes to 2 underwriting process when it comes to SBA lending. And it's only available for small business, actual business owners. Now, if you get into a property under SBA for owner occupied, you have, and then it's multiple locations, meaning you have different offices in the same structure, you have to at least own 51% of that property for it to be considered owner occupied. And then we'll go to the DSCR, which is 5 to 8 units. This one's not considered a commercial loan. It falls under the residential lending category, but it's available for over 5 units up to 8 units. The loan to value, it's pretty much similar to the standard financing for down payment. This DCR coverage is a little bit less at 1%. For this one, it's pretty neat because you don't need no tax returns for financial required for this. And you do have a 30-year fixed, and then you also have 30 and 40-year interest only options, which I think is pretty neat for those investors who are looking to scale to multi-unit or 5 units. For them, that's available as well. One thing I want.
It's not 30 years, right? It's like
Correct.
20 or 25.
Yeah, it's typically you don't get that. Now I do want to go over the 1 1/4 with the DSCR coverage. I think that's a lot of questions I get, and how banks look at that. When banks look at our underwriting a loan for a business, they do something that what's called phantom rate. They'll stress the financing. So, for example, if I'm giving you a 4.5% rate on your loan, they'll add anywhere from 1 to 2% on top of that, and they'll underwrite that way. So even though you're not getting that 6%, they want to make sure in the future, if rates go up, that you could still cover that debt, because the rates on a commercial loan are tied to the federal rate, to the prime rate. So that's important to know. So these are basically the main financing options you have for commercial real estate. Now, the documents that you would look, this is how an application will look like when you submit your documents over to the loan. Typically, they'll require 3 years of business tax returns, 3 years of your personal tax returns for all owners owning 20% or more of the business. Personal financial statements, schedule real estate business debt schedule, interim financial statements for the current year, obviously credit. And then this is also important too, the background about the business. How long have you been in business? What's the trajectory of the business? What type of business? That also matters. The ownership, has there been ownership change throughout the years, et cetera. And for an investor, like I said, they want to see that you have skin in the game. They want to see your investment experience. Do you have experience with investments in real estate, et cetera. And then, sorry, my screen's not working here. Can you guys still see my screen? Yeah.
Yes.
Move from my screen.
We're just not clicking forward.
There you go. Okay. And this is basically what certain documents will look like when you submit a full application of to the bank or to a lender. Your tax returns, obviously. Whoa, what happened? Sorry about that. All right, you got your tax returns, and then you got your scheduled real estate. Basically, you just list down all the real estate you own, the business debt schedule, any debt the business owns. You got your personal financial statement, your profit and loss statements, balance sheets. This is what the lender wants to see. It's also important to know when lenders look at your tax returns, these are the main, this is not the main thing to look at, but the main thing that will determine the thing, and I'm not sure what's happening on my computer here.
Yeah.
All right. Is yes, your gross receipt sales is important, but what's gonna really be, what the bank wants to see, are you making money out of your money? So line 21, ordering business, that's what they look at. What's your profit for the business? They want to lend to businesses that are profitable. If you're taking losses, it tells the bank, well, it's not strong, you can't pay me back. We're not willing to take that risk. When it comes to commercial lending, the bank sees it more of a risk than any other loan they can offer. But it's also important to know where certain aspects, for instance, If you're paying interest on any loans, they could add that back to your profit, and that increases your profit. They could add back income taxes. They could add back depreciation, amortization, all these things that added back to your profit to help you qualify for loan as well. So it's important to know that, because I've had clients come to me. It's like, hey, listen, we did this and they're not qualifying me, so they're a lender. I was like, oh, let me see if they're adding this back. And it turns out they're not adding that back. So it's important for the client to know that, hey, when the lender comes back, make sure you tell them, hey, did you add this back? Did you add this back? Because most times if the lender's not experienced, they're not going to add that back. So that's really important to know where areas in your tax returns you can see that the lender could actually add back to your profit. And then the benefits as a business owner when it comes to commercial real estate. The first one is my favorite one as a business owner. If this fits into your business plan, if you're a business owner and if you're thinking that when you retire, you're gonna sell your business, then guess what? This real estate that you own becomes your support for retirement. Now that business is paying you, you sold your business, but that business it's renting that location from you. So guess what? It helps as a business owner, it helps your support retirement. So, and that's, a lot of people don't think of it that way, but if you're a business owner and your plan is to sell at the end, this is one thing to look at to support retirement. You generate rental income now. What does that mean? If you get into a property where you can rent out office spaces and you're using 51% of the property to be considered owner occupied, you could generate more income for your business, or you could create an LLC and get an income from it as well. So that's another good one. And the other one for me, it's customized location to business needs. When you're renting, usually you're tied up to you're arranging the format of your space to where it benefits your productivity. In this case, you own it. You can do whatever you want in the building to focus on your productivity as a business owner. And then also you have a fixed mortgage amount. With leasing, just like renting on the residential side, they go up. They don't go down. They never go down. Your lease agreements will renew. It's always going to go up. At least for a fixed mortgage amount, you know that if it's a 5-year loan, then you know that those 5 years is not going to change. The other one, which is good, you build equity with that property, just like any other real estate. On the business side, you could use that equity for a line of credit, et cetera, where you could use it for your business growth. Helps your cash flow, ultimately helping for your cash flow, et cetera. And then the last one, obviously, is tax benefits, just like any other real estate, right? Depreciation, interest, all that good stuff will help you for your tax benefits as a business owner. And now as an investor, you know, that cash flow, right? You get that passive income, the valuation, you increase the equity, generational wealth. And then the good thing about commercial real estate and multi-unit, and I think Sammy would be the right person for this, is multiple investment strategies, right? You could do it on your own. You could do syndication. If you're a business owner, you could also do it that way. So there's multiple ways to get into investment properties when it comes to commercial real estate. And then lastly, we're in the last part, and that's pretty much it. It's pretty basic stuff, not a lot of information. I could go in deeper and confuse you, but I think it's important to know the basics of commercial lending, so that when you go talk to a lender, go talk to a banker, you know what you're talking about, and you could question these things, which is important. For me, more importantly, is the education than the deal. The deals come and go, but I think education is more important than anything else. So that was me, Nelson, with Mop Financial. We do residential, commercial, and Sammy Lyon.
Oh, Nelson, thank you so much. I appreciate that. And well, yeah, the chat is open, so you can throw in any questions that you want, and we'll get those answered. And in the meantime, I'll start asking some of the questions that already came in. I mean, I love that it's a whole different, you know, I'm a realtor, I do residential and commercial. I'm also an investor. I started with, you know, single family residential investment. Now I do apartment buildings with my partners. So at some point, you know, if you're serious about real estate investing, you're going to sort of some people never do residential and they only do commercial, but at some point you're going to sort of graduate to the world of commercial. And it is not complicated in the way that, you know, I think you described it very well. Like it's very much based on the numbers and based on the property and the business. But it is less accessible in the way that, like, you can just sort of go online and apply for a residential mortgage from some random website, right? But I think with the commercial lending, it's definitely a lot more about relationships. And I think it is catered more to like business owners and people who, I mean, to me, real estate is all about relationships and investing. So I think that is a big piece of it, is like who's offering what, you know, it's they're looking more at you, your business, than just you as like, a, you know, an employee or W-2 employee.
And if I can add to that, I think it's important when I come from, like I said, come from the banking side. I'm really big on relationships. If you build a relationship with a lender or bank, when it comes to a business owner, it's really important when it comes to lending, because that would also determine if they want to approve you for a loan or they want to take the risk of loaning. Because I said for a bank, the business lending, commercial lending side is they see it more of a risk than any other lending they can offer. So building a relationship with your banker, if you work with a bank, or your lender, whichever there's brokerage, important, because they could they paint that picture to the underwriter. So that's important. I think we have a question in the chat, huh?
Yeah. So there's a question: if we want to buy a mixed use property, do we need to use a commercial loan or can we use residential?
So on a
go through
on a mixed use property, it's going to be a commercial loan, unless something's wrong with the zoning, but I doubt it, because when it's mixed use, it's always going to be commercial. It will never be residential.
Percent. Maybe I was thinking about FHA, where if 50% of it is residential and then there's some commercial, you can use a residential loan, or it depends.
When the zoning is not, but like on the mixed use property, say there's like a REIT, there's apartment buildings, and that's always gonna be commercial. But for like, I think we like, had a client once that was looking at a
They had like a storefront at the bottom and like a couple units, or you know,
the square footage for the if it's in those cases, the square footage of the residential part is more than the commercial, even though it's its own commercial, it could go on a residential loan.
Cool. So yeah, so scale wise, right?
Yeah.
When you said mixed use, I was thinking like small, but a bigger thing obviously would be commercial. But like, just there are some of those weird residential places where there's like a storefront and it's, you know, but yeah, so that you would look at the square footage comparison. Great question though. If you have follow-up questions, go ahead and share that. Who is a good candidate for an SBA loan? The SBA loan being for, you know, business owners.
So I think the good candidate for a SBA loan is pretty much what it is, the small business owner, right? Where you have a certain amount of assets, but you don't have the 30% to give down for the property. And you're not making over that $5 million in profit as a business. So I think that part is really accessible to most business owners here. I mean, that's small business what runs America. So I think it's a broad picture, but it makes sense for someone. And then the most, you're never going to have the 30% available. When you have the 10%, you don't have that much assets. Your net worth is not much. And that's what will make sense for an SBA.
Okay, cool. And then I think there's sort of like a catch-22 here. It's like, you know, part of the requirement to get a commercial loan is to have experience. But if someone's just getting started, how do you get experience? Like how do you recommend people who are getting started?
So for the experience, I think it falls more over if you're an investor getting into commercial real estate, right? So if you already have the residential side, you have rental properties or under 3 units, you qualify. But how do you get into that? I think there's various ways, right? I think if you're a homeowner now, you're building equity, you can use that equity to start your small portfolio and then scale to it. Or also, they will consider experience be part of syndication, even though you don't run the property yourself. You still have assets that come from real estate.
Can you invest or can you get a commercial loan if you don't already own your own home? Like, can you rent and also invest?
If it's tough because every scenario is different, but say if it's a really strong candidate where they have the money, there's some lenders or banks out there that will do it. But for the most part, it's a tough one to even try and go directly to commercial real estate. Because unless you have the money for the assets, then it probably could, but in my experience, I've never seen it.
So basically, owning your own home is partly considered experience, not quite like fully, but at least one of the prerequisites.
You have some real estate to your assets base.
Like, okay. I mean, that's an interesting, question, because I think in the whole, financial freedom world, it's like, well, you want to lower your own housing expenses and also invest. And personally, I started investing in real estate before I owned a home. And so it is a cool strategy of like, keep your rent low, but I was investing in residential, so I didn't have to qualify for a commercial loan. But it's kind of a catch-22 there too, because it's like, well, do you want to invest or do you want to buy a house? And is that even helping your investment strategies?
Yeah, I think as for residential, I think it's more easier to get into investment property without owning something.
Yeah.
But yeah, commercial, I think it's a good investment. I mean, even as an investor, you could, even if it doesn't have to be like, if you're a real estate investor, you have the skin in the game, you're ready for commercial. It doesn't have to be a residential apartment building. It could be a retail shopping center for businesses. It could be that as well. So you have options that you have the experience and you're ready to jump and make that jump to commercial.
Right. One of the questions, so like a residential loan, I mean, I think most of us maybe only learned about this in 2008, but they get sold on the secondary market, and bundled up, right? And we can delve deeper into that. But for commercial loans, like who's actually funding these loans, and are they sold on the secondary market? Like how is that different from residential?
So when it comes to commercial loans, the bank owns that portfolio of loans. They don't sell it. So I mean, that's interesting when they sell it. Say if they're get bought out by another bank, they'll sell it that way. But for the most part, that's their portfolio and commercial loans. That's unlike more residential, they sell it to the second market. But when it comes to commercial, that's the bank's or the lender's portfolio.
Got it. So they hold that on their books.
Also, I think this is good to know as well. When it comes to commercial loans, it's not as the reason why it's not relegated as it is when residential lending is, for commercial loans, they don't need to be regulated just because banks are pretty strict to their underwriting guidelines when it comes to commercial lending. So, which is why, and there is, but there's not much where in commercial buildings they go default or they stop paying it because they're so strict on their financing that only the ones that are able to pay that back qualify for the commercial loan, which is why when it comes to investors, they want them to have the skin in the game in it. Opposed to residential, you don't have to have the skin in the game to get into residential real estate, et cetera. which is why residential is more strict as to the DTI and all that stuff. It's regulated. When commercial side, it's not as regulated as residential lending.
Got it. Got it. And so specifically for business owners who are looking to buy real estate, you know, you mentioned kind of like you showed the, you know, tax return, the profit and loss. And I think this comes up with self-employed people looking to buy a house too, right? Like from a tax perspective, mostly people tend to take a lot of deductions. But then if you're trying to buy, right, it looks like you don't make any money on paper. So for
in my experience with businesses, I've always seen returns where they're a good business, they make good money, right? They could afford their commercial space, but because who's doing their taxes or their CPA, that's screwing them to qualify for a loan. So I always tell business clients, yes, there's going to be certain industries. Every industry in business is different. There's some industries that, yes, all these losses make sense, but there's certain industries where they're just taking losses, unnecessary losses, where it doesn't make sense. And so it's important as a business owner, even as an individual, who's doing your taxes, who's advising you on your taxes, because at the end of the day, that's what determines if you're going to be able to qualify for something like this. And in commercial, unfortunately, there's not much options like this in residential. At least in residential, we could go to a bank statement loan or et cetera. But on commercial, it's all what you do it's on paper what matters. That's what you file on taxes.
So what advice do you have for entrepreneurs who, I mean, you know, we're sort of in the like great resignation. I think the number of businesses that have started in the last year or two is like huge. I mean, so I think a lot of people who are, you know, maybe there's the more established businesses who frankly are probably not watching this YouTube video, but you know, for entrepreneurs who are starting out, like what kind of advice would you give them as they're sort of thinking on their runway to buying real estate?
It's all about building a plan. I think in my experience with businesses, I've seen a lot. Businesses will get into the business, but they don't have a plan. They don't have no business plan. And if they do have a business plan, they don't stick with it. So the other thing to it too is that you have to remember that if part of your business plan is you want to get into real estate, et cetera, that's for your business, you have to remember it's a marathon, not a race. So even in 2-3 years from now, you can't do it because of losses, necessary losses, but down the line, it's going to happen.
Very deep advice. I'm feeling that these days. Like, oh yeah, this is a marathon, not a race. Just chill, do your daily stuff. But yeah, I think thinking ahead. That's what I talk to people, you know, in all, you know, because I'm on the real estate side, and I kind of like have to wait for people to, I mean, unless they're not getting a loan at all, I have to wait for people to talk to you, come back, like think about it. And I'm really always urging people to call a lender sooner than later, because that's part of how you create a plan, right? Like you want to, even if it's a 2-year timeline, a 3-year timeline, like you want to know where you're going, and not just, you know, because the tax returns, you're going to have to wait a year and then another until April. And then, you know, you want to be thinking ahead that way, strategizing. So that's a big one.
Yeah, I mean, I think, yeah, like I said, have a business plan, stick to it.
Mm-hmm.
If you have to adjust as it goes, do it, but still, you know, stick to that ultimate goal. I see a lot of business owners who something goes wrong in a year and they fall out track for that business plan. It's like, and which goes back to what I said, right? It's a marathon, not a race. But I also think too, as my advice to business owners dealing with business owners for pretty much my entire career, is it's important to have a good team around you, not in your business, but outside. Like I said, the CPA, a good realtor, a good lender, a good banker, etc., to have those in place as a business, because I think those are important as well, because it's going to determine as well at the end. These are the people that are going to help you achieve your business goals. So yeah, that's pretty much why I always give all my business clients.
Totally. No, I think having the right team of folks, network of people you can rely on, who are all experts in their respective fields, I'm curious, this is a question I have about, because I'm like super biased, gung ho on real estate and investing. And I've, you know, anytime people ask me about real, I'm like, I'm the wrong person to ask because I'm always going to say buy real estate. Don't sell real estate, just buy more. But I am curious, as a business owner, if you're renting a space, you can deduct 100% of that rent. But if you own the space, now you have a mortgage, you can't deduct. I mean, you have depreciate, you have other tax benefits. I mean, overall, real estate is very tax benefit oriented, right? But and so I loved your slide about like as a business owner, you know, especially like when I help people buy businesses, we really are looking, if possible, to buy a business with the real estate attached, right? So like if we're trying to buy a laundromat or a gas station, like we want to also own the real estate because you know, having the real estate gives you a huge leg up. But I'm curious, devil's advocate, if you own a business and you're renting a space, do the tax benefits sort of like, how do you assess the pros and cons of you can deduct 100% of the rent versus, you know, the other tax benefits of owning the space like depreciation, but you can't deduct, you know, the mortgage payment basically on your taxes.
But
how do you assess like the pros and cons of that?
Even though you could do 100% of the rent as a deduction, there's more things you could do that will make up for the 100% or more when it comes to, because it's also interest that you could do as a deduction, and there's more to it. So I would say, and this is it's probably contradicting what we're doing, because if we're doing this because we want business owners to buy real estate, right? But not all businesses are designed to own their real estate. So that's also what, you know, keeps it. It depends on the industry you're in, if you really need if it makes sense. It's not going to make sense for our business owners to own real estate for the business.
When would it make sense versus not making sense?
So for instance, I could give you, so when it comes to like a manufacturer, let's say a manufacturing business, right? You need a factory, stuff like that. You need a warehouse space. I think for a business in that matter, it makes sense to own your facilities. But if you're a business owner and you don't want to go and you don't want to deal with the renting space and stuff like that, let's say if it's just an office of a tax accountant or whatever, it's gonna be hard to find a office space, which there is, but where it meets your square footage. But most of when it comes to like, in my experience with tax accountants who have their own office when they buy real estate, they get into multiple spaces, right? So that would make sense. But if I'm a business owner, I don't want to deal with that headache, then it doesn't make sense for you to even get into that rent makes sense for the business. So that's important. So it's, you know, you have to assess your business if it makes sense for you, does your business really need a brick and mortar, or do you need a own real estate for the business?
Right. Like you have to, I mean, and I feel like the buckets we're talking about for commercial real estate is like a business owner, you know, and then just an investor. But as a business owner, essentially, like, let's say you're, you know, a business that just needs office space, like, unless you're able to find just an office that's the perfect size for you guys, you're probably going to find a bigger office space, then you have to divide it, then you're now a landlord. Maybe you had no intention of being like, you wanted office space for yourself, but now you're like dealing with leases and tenants, and you're like, wait, I wasn't trying to invest in like become a landlord. So that makes sense versus obviously someone whose goal is to be a landlord, then, you know.
Yeah.
And you're not,
so
you might, and some business owners might be happy to do both, but if you're just focused on your business, you don't want to be dealing with that, and it doesn't make sense, just rent. No, that's good. That's what I mean. Ultimately, I think even in residential, I'm just like, look, we have to talk about your goals and if this is even the right move for you, because we can just say buy real estate, but like, in what, you know, in what context does it make sense, and what actually makes sense in your scenario?
Yeah. So it's, it's just not, but yeah, like I said, it's just not buy real estate, but it has to make sense for also for the future.
Bye. Cool. Those are all the questions that we had and then that I had. Is there anything else that seems relevant or just that you thought of, or last words that you wanted to share?
No, I think I covered everything, the basics that's important for business owners and investors, or investors looking to invest, to know. But yeah, like I said, if you need anything from me, any questions, I'm here to help. My contact information is on the screen. Feel free to reach out. We're here to help. Like I said, education for me comes first, and anything else, deals come and go, but education is an important part of it. So if I could provide that for you, then that's all it's going to matter.
Totally. I totally agree. I think for even just for us as business owners, like, to me, this is a long game. I want someone to make the right choice and figure out what's right for them. And, I appreciate you taking the time to do these workshops with me, do this time, because I think ultimately whatever we can share that helps somebody, that's great. That's exciting. But I appreciate, you're so this is you just barely scratched the surface. So much about all of this, and also in your business lending experience, not even just real estate related. So I appreciate you sharing that. Your information, both of our information, is here and then in the description. And yeah, reach out anytime, and we're happy to just chat. I think both of us could just talk about real estate endlessly. So if anyone calls us and wants to talk about real estate,
We'll bore you.
We'll bore you. Yeah, you have to watch out when you call us. But please call us, because all the people around us are sick of hearing us talk about real estate all the time. So.
Yeah. That's one thing that I could say, and this falls into both commercial and anything, not just residential or commercial, but I know right now with where we are in the market, with the recession coming, rates coming, the other thing I could tell you as a business owner or someone individual, not a business owner, is don't let the market determine what you're going to do with your investment, etc. So don't get discouraged. Like I said, the time will come. If it's not now, we'll be down the line. So that's pretty much what.
We're still buying apartment buildings. It's just if the numbers make sense. That's what's so I don't know, there's something so gratifying about the tangible basicness of real estate investing. It's here, once you learn how to analyze the property and run the numbers, it's it either makes sense or it doesn't make sense. And then there's a threshold of, is it worth it? And that's it. There's no, it's just very you run the numbers and does it make sense? So I think, even in this kind of rising interest rate, so most stuff, it does not make sense, and that's fine. But we're still buying. And if you're just disciplined and conservative, and especially if you have a good lending partner who's sort of forcing you to, run your numbers conservatively.
I hate when people, not hate it, but it kind of, when people say this, when they say it matters who you work with, but in reality, it doesn't matter. I mean, you do have to find yourself a lender or a realtor that knows what they're doing. And when it comes to business lending, not all lenders are going to be familiar with your type of business. Some lenders are more if it's a doctor's office, they'd rather do that, and they don't understand the restaurant and stuff like that. So I think that matters. This is something to keep in mind as well as a business owner.
Totally.
All lenders understand all type of financials when it comes to different type of businesses.
Right. Awesome. Well, thank you so much. Anyone, feel free to reach out anytime. And Nelson, appreciate your time as always, and have a good night.
Thank you.